Now that we're going to get more regulatory green lights, we're seeing institutional investors focus on this new asset class. And as they're learning about it, they're saying, wait a minute, this new asset class, or this component of a new asset class, Bitcoin, is going to reach 21 million units out there, 21 million Bitcoin out there at its peak, and no more from there on. Where are we now? We're already above 19.5 million units. And so supply demand, they're doing the arithmetic, and we see 1 million to 1.5 million by 2030. The probability of that has increased because of institutional.
Cathie Wood has reaffirmed her bold $1.5 million Bitcoin prediction by 2030. A longtime advocate for cryptocurrency, she believes blockchain and other disruptive technologies, AI, robotics, energy storage, and genomic sequencing, are set to transform the global economy. Wood likens this convergence to the revolutionary impact of electricity and the telephone in the early 1900s, predicting an even greater economic shift. In a Bloomberg interview, the ARK Invest CEO calls Bitcoin digital gold, highlighting its finite supply and growing appeal to institutional investors. Stay tuned for clips from her insights, and don't forget to like, subscribe, and turn on notifications.
If you look at our the performance of our funds since the election, they've far outpaced the market, outpaced the Mag 7 and so forth. So I think what the market is beginning to say is this administration is going to support innovative strategies, anything that will accelerate the growth, increase the productivity of our economy. Deregulation is going to be, we think, a very large part of that. Tax incentives, tax rate cuts as well. You mentioned perhaps the cutback in government spending programs. You know, in our mind, government spending, longer term, is taxation in one form or the other. It's got to be paid for with increased taxes now, increased taxes later, or basically through inflation, inflating away the debt. So we think that's going to be very positive, this drive towards increasing the efficiency of the government, which will then limit the kinds of tax increases we've seen over the last few years, and perhaps even continue to roll back taxes, leaving more for the private sector at the expense of sort of inefficiencies in the government sector. In terms of turbocharging growth, I think if tax rates, if this administration is going to cut tax rates, the most important thing it has to do is make sure they're retroactive to January 1st of 2025, because, and we learned this from the Reagan administration, if they defer or phase in tax cuts, businesses and individuals will wait for the lower tax rates, and that can weaken economic activity. Beyond that, deregulation, critically important. I think one of the reasons venture capital has had so much trouble during the last few years, and strategies in the innovation space, especially in life sciences, is because M&A has been prevented by the FTC. That is going to change. So we are finally going to have price discovery as strategic buyers bid for these innovative companies. We'll see how much they're really worth. This has not happened in a long time. Yeah. We also think, therefore, there will be liquidity events for private companies into the public world, which is also going to become very important.
Cathie Wood is optimistic about President-elect Donald Trump's return, anticipating policies like tax cuts and deregulation to boost the U.S. economy, drawing parallels to Reagan-era expansion. She predicts reduced oversight from agencies like the SEC and FTC, paving the way for increased mergers and acquisitions among startups. In a Bloomberg interview, Wood highlighted how these changes could drive innovation and price discovery, with strategic buyers competing for top companies. Above all, she remains highly bullish on Bitcoin, reiterating her bold prediction of $1.5 million per coin within 6 years. Stay tuned for clips from her insights, and don't forget to like and subscribe.
Well, what's interesting about Bitcoin today, now that we're going to get more regulatory green lights, we're seeing institutional investors focus on this new asset class. And as they're learning about it, they're saying, wait a minute, this new asset class, or this component of a new asset class, Bitcoin, is going to reach 21 million units out there, 21 million Bitcoin out there at its peak, and no more from there on. Where are we now? We're already above 19.5 million units. And so if institutional investors are looking at this new asset class more seriously, and Bitcoin is really the first of its kind in a new asset class and will be, we believe, the biggest opportunity of them all, they must consider an allocation. And so supply demand, they're doing the arithmetic, and we see 1 million to 1.5 million by 2030. That the probability of that has increased because of institutional. Well, I think it's a very big idea, and it's not just speculative. It's a global monetary system that is rules-based, it is private, it is digital, it is decentralized, and it is backed by the largest computer in the world, or the largest computing system. It's the most secure network in the world. So that's very important. Gold would be in the same category. Gold is a store of value, and it is fairly scarce. What's interesting, in the last year, with the last halving this April, the increase in Bitcoin, the number of Bitcoin per year, the percentage increase, dropped to roughly 0.9% per year. That is below the 1% long-term growth in the supply of gold. So it is becoming even more scarce than gold. And the difference between gold and Bitcoin is when the gold price goes up, as it has, production goes up, the rate of increase in the supply goes up. That cannot happen with Bitcoin. It is mathematically metered to go up now 0.9% per year for the next 4 years, and then the supply growth will be cut in half again. So we think you can use gold as a guide in terms of what this asset class is right now, at least. It's very definitely a store of value, a digital store of value, and it's a very big idea from our point of view.
Global economic forecasts predict a slowdown to 2.6% growth, but Cathie Wood offers a bold alternative: 8.5% growth driven by 5 key innovation platforms: AI, blockchain, robotics, energy storage, and multi-omic sequencing. Currently valued at $19 trillion, these platforms could skyrocket to $220 trillion in market cap within 6 years. Wood credits this potential boom to pro-innovation policies, including deregulation and tax cuts, which she expects from a Trump administration. These measures could revolutionize the global economy, fostering growth in sectors like digital assets and AI. Do you agree with her optimistic outlook? Share your thoughts below, like, and subscribe for more insights.